Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD, Euro dollar. So, let's get started. This is a 4-hour chart of Euro USD. No. This is a daily chart of DXY, and as we all know, that DXY is an uptrend for last few months. Okay, and if we look at the news and if we consider the fundamental factors, then probably the uptrend will continue, because right now DXY is standing at 109.83. This is the current market price here, and if I take you to a daily chart, then you can clearly see that DXY is in upward channel right now. Okay, so yes, the further upside is possible, and if the channel continues, then yes, we will see more upside on DXY and further downside and pressure on the other USD pairs. Now let's have a look at the chart of Euro USD. This is the chart of Euro USD, and instead of the 4 hours time frame, today I would like to show you the daily time frame at first. So this is the daily time frame on Euro USD, and as you can see that on the daily time frame we have a wedge pattern, falling wedge pattern. But if we follow the news, then yes, further rate hike is possible, and if the rate hike comes, then obviously there will be further downside on the chart of Euro USD. And as I always say, whenever there is a battle between fundamentals and technicals, fundamentals always win. So if you're considering the wedge pattern, and if you're thinking that there will be or there may be a trend reversal coming soon, then you must be very careful, because right now we do not have any fundamental factor that will bring a trend reversal on the chart of Euro USD. And till then, you must consider the chart of Euro USD as a bearish chart. As I just said, the overall atmosphere is very much negative. Now let me take you to the daily our usual 4 hours time frame. This is the 4 hours chart of Euro USD here, and this is the current market price. And if you simply look at the chart of Euro USD, then easily you can understand that this is not a good chart. This is not a good looking chart. The overall the chart may be towards the downside. Okay, overall the market may be extremely bearish, but usually our trades do not last from here to here. Usually our trades last for a couple of hours. Okay, and this is a 4 hours time frame, so each candle stands for 4 hours. So if you simply follow the chart here, then obviously the picture is not very beautiful, not very clear. We can see a choppy market, a typical choppy market on the chart of Euro dollar. So my dear friend, if you are looking for a swing trading opportunity, or if you're looking for a positional trade where you can sit idle and you can earn few hundred pips, then this may not be the chart until and unless we get any news that will bring a fundamental change or that will completely change the direction of the market. Okay, so for in this chart of Euro USD, you must be very careful, and beginners, new traders, you should try to avoid, and you should look for a better chart. Okay, so what are the trading opportunities then? Let's discuss one by one. First of all, if market goes up from here, then you can see that around 1.0070 to 1.0075, this is our first resistance zone. Why we are considering this as a resistance? Because of the 200 moving average. The red line is the 200 moving average, and most of the time whenever the market was trending, we have seen the 200 moving average acting as a resistance, dynamic resistance in the market. So considering the 200 moving average as a resistance, as well as the Fibonacci retracement of the 50%. So if we consider these two factors here, then around 1.0070 1.0075 level, we can expect the market to reverse considering the overall trend. So if market goes up and reverses from this particular level here, if you see price struggling around this level, price being rejected from above, market forming shooting star kind of a pattern or a bearish pin bar, then you can definitely go for a sell position around this level. Okay, and in case there is a sudden buy in the market, and if market goes up, then do not take a sell position. Obviously, being a trader, see, this is the main difference between a trader and a gambler. A trader only trades when the opportunity is right, and a gambler trades whenever he feels it is right. Okay, so if market breaks it, in case if market breaks it, then you should be drawing a line like this. Okay, you can see I have drawn a trend line. So in your charting platform, draw a trend line like this, because a trend line is acting as a dynamic resistance for quite some time, for a long time. So if market breaks also this level due to a sudden buy position or buying pressure in the market, you can expect the market to reverse from here. Okay, so this is our second resistance. So if market reverses from the second resistance, as this is a dynamic level, I cannot give you the exact figure. You can expect the market to reverse around 1.0100. Okay, so if market reverses from the trend line at the top, you can definitely go for a sell position. So this is the scenario, or these are the trading opportunities if market goes up from this particular level here. Okay, on the other hand, if market goes down, then your important level will be 0.9950. This is your first level you should be observing. If the volatility of the market is not high, if the market is low volatile, if you see that there is not much movement in the market, then you can expect the market to reverse from here, because right now market is trying to form a temporary support. Try to understand my words. Market is trying to form a temporary support, but we do not have any proper support or any strong support yet. So if market comes down to 0.9950 level and market bounces, okay, you can go for a buy. And in case the selling price is high enough, and if you see that no, market is forming big red candles, just avoid it. No need to do anything, just avoid it. Okay, then your next level will be 0.9930. This is your second support. Why we are considering the second support? Because of this, because of the strong price rejection couple of days ago. So if this support fails, this will be your next support. And in case the second support also fails, because yes, we have seen the bearishness of the chart, if the second support also fails, then you can go for a sell position. Yes, you can go for a sell position below 0.9930 level, and at least you can expect a profit of 30 pips. Okay, you can go for more than 30 pips also, but at least you should be getting 30 pips if market breaks the level of 0.9930. So these are the trading opportunities that I see on the chart of euro dollar. If I miss anything, then please write down in the comment section. I would love to learn from you. As I always say, this is my analysis. I can be wrong as well, so please do your risk management. Okay, please calculate the position properly, and please do not gamble with your hard-earned money. Bye bye, take care.